In this video, I'm going to be explaining to you the truth behind Forex brokers and why they win and how you can also win. Now, what I'm going to explain to you, most Forex traders are almost completely blind to, but once you see what I'm going to show you, then you'll never be able to unsee it. As a matter of fact, what I'm going to show you is actually something that I learned from a friend of mine that worked really intimately with a very large retail Forex brokerage. And so he got to see the inner workings behind how the Forex brokers almost always make money. Now, in this video, I'm actually going to go inside of a Forex broker's P&L and to show you exactly when they're making money off of you outside of what you could normally think of things like spread and things like commissions and things like swap fees. And by the end of this video, you'll understand how you can align yourself with the broker and increase your odds of making money significantly. So with that being said, let's talk about the few different ways that Forex brokers make money that you're probably aware of. And then I'll explain to you how they're actually trading against you and how to know actually which direction the Forex broker that you're trading on is actually trading, so that way you can align yourself with them. And I promise you this is going to be mind-blowing once you see this. So first things first is one of the ways that Forex brokers make money is they make money on something called the spread. Now you're probably aware of the spread, and it's not news to you, but the spread is essentially the difference between the bid and the ask price, right? What it is it's a little bit of a difference or differential from when you want to get in and when your broker actually gets you in, and they make that little tiny percentage right there anytime that you take a trade. Now, the next way that brokers make money is they'll charge a commission. So a lot of Forex brokers will charge about $7 per round traded lot on their brokerage, which anytime you take a trade, right, the broker's automatically making money. A lot of you guys are probably already aware of this. And the last way that Forex brokers make money is something called a swap fee. And basically what this is it's a fee that you'll get charged or you'll get rewarded depending on what's happening with interest rates. Anytime that you actually take a trade and you hold that trade overnight, then they'll incur some sort of swap fee, whether it be positive or negative. Now, all these ways that Forex brokers make money, probably not that new to you. And it's a way that they stack the odds in their favor and is one of the part of the reasons why retail Forex traders aren't that profitable. And the best way that I could think about it is if you think about like a casino and you think about the game roulette, right? It's this spinning wheel and there's basically these black and red slots, right? All of the red slots are even, all of the black slots are odd numbers. And there's this one slot that's actually a green slot, and it's usually a 0. Sometimes they have a 0 and a double 0, but this is essentially tilting the odds slightly back into the favor of the house, right? And this is the same thing when you're trading on a retail Forex brokerage. You know, they have things like the spread and the commissions, that are going to slightly tilt the odds back into their favor. So that way the house is never really losing money. Now, all of this you're probably aware of, but here's something that maybe not all of you guys know. This is going to be interesting once I break this down for you. But essentially, once you start trading with a Forex brokerage, they're either going to put you on what's called an A book or a B book. And essentially what that means is if they put you on a B book, which the vast majority of Forex brokers are, then this means that they are essentially trading against you. If you take a buy trade, then they're going to take a sell trade. And essentially you're fighting against the broker. Now, generally all brokers will put people onto this B book because that they know that most people are actually going to lose money. And so they just want to take the opposite trades of you. Now, if they see that you're starting to become profitable after a couple of months, then they may switch you over to what's called their A book feed, which essentially just means that they're actually going to take the same direction trades as you. So no longer are they competing against you, trading against you, but they actually trade with you in order to help them even make more money. Now, with that being said, let me show you a quick example of a Forex broker's P&L. So in order to understand this, right, we have to first basically understand market structure, which you've probably heard of ranging and trending markets, right? Ranging, you're not really seeing any increase in prices. You're kind of just seeing it float between a range and then a trend. You're seeing higher highs and higher lows, or lower lows and lower highs. And essentially what you'll notice is that the smart money or the brokers, they will make all their money in trending markets and actually lose money during ranging markets. And I'll just explain this to you here. So here in red, we see that this is ranging market phases. Then in blue, we see these trending market phases. And so you can see in red, these are sideways, choppy, ranging markets with no trend. And this is where retail traders or the herd is going to make money here. Now, most retail traders, they're trading some sort of mean reversion system where they're trying to catch bottoms, trying to catch tops. They're using things like overbought and oversold indicators. This is how the vast majority of people actually trade. And so they generally tend to make money in these sort of ranging markets. And brokers and smart money tend to actually lose money in these ranging markets. Now, as you can see here, also here in blue, this is a trending market. And this is where the herd loses a lot of money, and smart money of the brokers actually come out on top is when these trends start to happen. The part of the reason is obviously the herd is continuing to try to catch tops and catch bottoms. But the problem is you don't know how far a trend is going to continue. So if you're trying to catch the top on an uptrend, you could just continue getting blown out your stop loss. And retail traders have a lot of bad habits, right? Like dollar cost averaging or using martingale sort of betting systems. These sort of things put their account in jeopardy. Now, if we take a look, this is actually inside of a real Forex broker's P&L statement. You can see kind of how this works. So this is a B-book broker where essentially they're trading against their client. And you can see here in this first phase of the market, this was actually a sideways ranging market. And you can see during this phase, the broker actually lost $50,000 and their clients actually made $60,000. Okay. So you can see the total broker's P&L, negative 50,000. And this was on July 2nd, by the way. The total client's P&L was positive $60,000. Now, what do we see that happens here? The market continues to move sideways. So this is the very next day on July 3rd. And we can see the broker's P&L, they lost another $30,000, totaling up to $80,000 lost. And the retail traders on the platform, the clients of this brokerage, ended up making $45,000. So they're net $105,000. Now, we can also see this continues to happen all the way up until July 9th, which is an extra week. And we can see the market continues to move sideways, where the broker goes off and loses an additional $40,000 and the clients end up making an additional $55,000. They're doing well during this ranging phase of the market. And as you can see, the total broker's P&L was $120,000 negative, and the total client's P&L $160,000 positive. Now, here's what starts to happen. What starts to happen is on July 10th, we get this upward movement, this strong burst into an up move, and we see that the broker's P&L goes up to $400,000. They start making serious money when this trend starts happening, and the client's P&L is positive $50,000. So now we can see that the total broker's P&L is $280,000 positive, and the client's P&L is $210,000. Now, what starts to happen as we get a more even continued uptrend? We see that, retail traders, they thought that this was the top of the market right here, and they put their stop losses up here, and they're trying to sell down into this, trying to catch the top. And what we can see here is that the brokers actually made $650,000 on this big move, and the clients lost $600,000, and the total broker's P&L ends up being a positive $930,000, and the client's P&L happened to be a negative $390,000. And this isn't just me pulling numbers pie out of the sky. This was actual numbers over the course of a couple weeks from a real large Forex broker. And this is exactly how it happened. So what do we actually learn from this? Well, we learned that besides things like the spreads and besides things like the commission swap fees that, are going to slightly tilt the odds in the house favor, well, the house is also trading against you a lot of the time, and they really make all of their money on these big trends that happen in the market. So what can we learn from this? Well, we can learn to trade with the trend. We can also learn to use hard stop losses, and we can also learn it's not generally smart to try and catch tops and bottoms because we don't ultimately know how long a trend is going to form. Hey, and by the way, just a side note, if you are finding this video interesting and helpful, then go on over to fundedtraderfasttrack.com so you could trade live with us in the mornings with one of the best Forex traders that I know that's on the market. He's incredibly consistent. You're absolutely going to love what you learn from him, trading with somebody that's an actual expert and learning something called volume reaction trading, which is a total game changer. So now that you know when Forex brokers are actually going to make money in these trending markets and sort of the odds that they have against you, the next thing that you need to do is watch this video. We basically analyzed 43 million retail trades from the same exact brokerage, and we found out that there's actually just one thing that you can do. And if you do this one thing, it'll literally 3x your odds. You're 3 times more likely to become a profitable trader if you just do this one thing. So check that out right now.